The United States owes more than $37 trillion. That's 37,000 billion dollars. It's such a huge number that most people can't even imagine what it looks like. To put that into perspective, if you spent $1 million every single day, it would take over 100,000 years to spend that much money. If a normal person owed that much money, they'd be bankrupt almost instantly. So why hasn't the United States gone bankrupt? And here's where things start getting interesting. The United States doesn't owe that money to just one person or one country. Millions of people, businesses, and even other governments have all lent money to America. But why would anyone lend even more money to a country that already owes trillions? The answer completely changes the way most people think about national debt, and it all starts with something called a Treasury bond. To understand the national debt, you first need to understand how the government borrows money. Imagine the government needs money to build roads, fund the military, or pay for public services. Sometimes tax revenue isn't enough to cover all those expenses. Instead of raising taxes immediately, the government often chooses to borrow the money. But it doesn't borrow money the same way you borrow from a bank. Instead, it sells something called Treasury bonds. A Treasury bond is simply a promise that the government will pay the money back later with interest. In other words, investors lend money today and expect to receive more money in the future. These investors aren't just billionaires. Pension funds, banks, insurance companies, investment funds, and even ordinary people all buy Treasury bonds. Foreign governments buy them too, because they're generally considered one of the safest investments in the world. But if America already owes trillions of dollars, why do investors keep buying more and more of its debt every year? At first, lending money to a country that already owes trillions sounds like a terrible idea. But investors aren't giving the government free money. They're making an investment. Just like putting money into a savings account, investors expect to earn something in return. That reward is called interest. The government promises to return the original money plus a little extra. So the real question isn't whether the government owes money. It's whether investors believe they'll get their money back. For decades, the United States has built a reputation for paying its debts on time. That's one reason United States Treasury bonds are generally considered among the safest investments in the world. As long as investors trust the government to repay them, they're usually willing to keep lending money. But if investors are willing to lend money so easily, why doesn't the government just skip borrowing altogether and print the money instead? At first, printing trillions of dollars sounds like the easiest solution. After all, if you can create money, why not simply use it to pay off every debt? The problem is that creating more money doesn't automatically create more goods or services. If everyone suddenly has more money, people start buying more things. But if stores don't have enough products to meet that demand, prices begin to rise. That's inflation. And it reduces what your money can actually buy. Print too much money and inflation can become a serious problem. Investors could also lose confidence in the value of the dollar. And if investors stop trusting the dollar, borrowing money becomes much more difficult and expensive. That's why governments usually borrow money instead of simply printing unlimited amounts of it. But if borrowing is the better option, does that mean the United States will ever be able to pay off all of its debt? Surprisingly, most economists don't expect that to happen anytime soon. That's because governments usually don't pay off all their debt at once. Instead, they repay old debt by issuing new Treasury bonds. This process is called refinancing, and it's something many governments do every year. So the goal isn't necessarily to eliminate the debt, but to keep it manageable. As long as the economy grows and investors continue buying Treasury bonds, the system can keep working. The real danger comes if debt grows much faster than the economy or investors lose confidence. If that happens, borrowing money becomes more expensive because investors demand higher interest rates. That's why economists pay close attention not only to how much debt exists, but also to whether it's sustainable over time. In other words, the biggest question isn't how much the United States owes today, but whether it can continue managing that debt in the future. So, were you surprised by how the national debt actually works? Share your thoughts in the comments below. If you enjoyed this video, leave a like and subscribe for more finance and business explainers.